Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at Facebook, and a bit of a mixed bag today. We did see a rejection from the middle Bollinger Band daily resistance. That level is 118.49, but we did confirm the bullish reversal hammer from Friday. So we need that middle Bollinger Band as support tomorrow to see this bounce attempt follow through. We do still have a couple higher lows on the daily, but very clearly the bulls have not broken the lower high pattern on the daily, and that means the bears are in control, especially when you compare it to all the other tech names which have already broken these lower highs. So middle Bollinger Band resistance, very key level going forward into tomorrow, and support is the low of Friday, 116.30. And the weekly time frame, all about the 50-week moving average. We closed right on it last week. That's at 117.80. And you can see we're in a very tight range here over the past 6 weeks or so. And if we see a break and another leg to the downside after 113.55, we're looking down at 108.23. So certainly not there yet. The bulls are maintaining those higher lows. And you can see this wedge on the weekly chart that is forming with the couple higher lows and the certain lower highs here. So the wedge is forming here on the daily. Let's draw these trend lines real quick so we can see it a bit more clearly. And I use the real body candlestick, so really not much of a wedge. If you did use the wicks, which I personally don't use, but if you did, there would be a bit more of a wedge with this uptrend here. Not significant, but for me, the interest is in the downtrend resistance line because we're in a situation where the bulls need to prove themselves to us and break some key resistance levels. So that's the downtrend line where I'm hitting the real body of this candlestick. We have a couple of wicks hitting back here, and it's being hit 3 times on this downtrend, so that does validate that this is a downtrend line to be keeping an eye on. And we can see that's going to be a resistance level after the middle Bollinger Band, and we're going to have to see that become support for a clear bull break. Tightening range is forming. Bears have the upper hand overall. Let's look at the shorter term time frames. Bulls did gain a victory here too short term because we had that very strong start first thing, and we were looking at consolidation after a new high. A lower high formed, but we did maintain a higher low. We didn't break the low of this consolidation, 117.85. And at the end of the day, the S&P 500 broke its low of that consolidation, as did Apple and some other tech names. So the fact that Facebook was able to maintain that level is a good sign. 117.85, the level to watch heading into tomorrow. Looking at the hourly time frame for Facebook, bulls are bouncing and trying to hold this 20-period moving average. Looking back at the last 5 days, we can see that it has rejected the price as resistance a few times. So if the bulls can hold that level, they certainly will need to do so with any hope of trying to turn around this trend. So I personally don't like Facebook for anything more than day trades at this point. I don't like how we don't have very clear direction on the daily time frame. I would certainly be choosing bearish over bullish at this point, but that is seeing a very clear tightening range, and when the range tightens, volatility and volume drops, and so does trading opportunity. So day trade still fine for Facebook. There was a nice bull day trade first thing this morning. But other than that, I want to see a clear break of this higher low, lower high pattern to be confident in any swing positions heading into the new year. So I appreciate you watching. We'll check back in tomorrow. Have a wonderful night.